The philosophy begins with something that I think everybody here, whether you're experienced or not, has probably heard your whole life. What is the first rule of real estate? Somebody shout it out. Location, location, location. Right, yeah. The funny thing is that if you were to watch Bravo TV or Home and Garden TV, you'd think that finding a great deal, like instead of location, 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 a lot of the noise around real estate investing, a lot of the seminars that are out there, a lot of the coaches that are out there, most of the TV shows that are out there are about deals, deals, deals. So they're not as concerned about where you're buying something as what you're buying. How can I find a property I can get for a steal? None of today is about that, and none of what we do is about that. I couldn't find you a steal. In fact, if I found a house for half price, what do you think I would do?
Buy it yourself?
I'd buy it myself, right? So that's not our promise. Our promise is it's all about quality, all about taking positions in places that are on the rise. What's cool about this asset class is that it's very common sense. Like the supply and demand is based upon people and families, right? You don't have these wild cards like retail space or hotels or office buildings. Like office is good, but what about people who are remote and telecommuting? And retail is good, but then there's Amazon, right? It doesn't matter what happens technologically. People want to live indoors. If they have kids, they tend to want to get a dog. They tend to want to live in a house. And so when you can track the population trends and then understand the reasons why people are going places, the demand side is very easy to grasp. And all you have to do if you're doing the research to pick winners is just check out the prices and then go check out the towns. Actually go drive around. Get a feel for what you see when you're there. Do the places look like they're turning around like in Gastonia right now? You're going to see a lot of stores are vacant and they say for rent. But just a year ago they said for sale. Okay, I've been watching for a while. They were for sale and they were beat up. Now they've been purchased by investors, they've been fixed up, and now they're for rent. So those investors who've bought up most of Main Street, Gastonia, they believe that something good is happening. And so they think coffee shops and breweries and retail stores are going to be clamoring to go into this town. I see stuff like that, I pay close attention. I want to try to understand why. All right, so check this out. This is a neighborhood being built. This is right up my alley here, okay? Brand new houses. This is the reason why you get in the car and you go. You wouldn't find this necessarily. You wouldn't find this on Zillow. You wouldn't find this on the website. You wouldn't know that you can see Amazon from here. But this makes me so happy to have discovered this because I would have missed it maybe. And there it is, right there in the distance. The mothership. I grew up in New York and I saw the counties that have commuter rail, the average price is twice what the ones that don't have commuter rail are. I think what happens is the town right around where the train station is going to be is going to gentrify. You're going to have coffee shops and bars and restaurants coming right there. So I see a lot of evidence that commutability not only is going to light up the town where the train station is going, but it might light up a town 25-minute drive away from that train station that right now is a really good deal because even though the train station is not in that town, they're going to drive 25 minutes to get a parking pass and go on that rail. So I think that's a winner right there for me. My money's where my mouth is on that one. Show up for a planning board meeting. Show up for an architectural review board meeting. Go check with the town, the municipality website. See when they have their meetings, when the person who wants to build 200 houses or a multifamily complex and he has to get approvals for it, be in the room, right? There's 30 people in the room. You can see the gavel fall. You now saw something happen live. You can get a feel for whether or not the people who run the community are on board or not. It's research that you can do that only 30 other people are in the room doing it. Maybe a couple of thousand read the article, maybe a couple of hundred read the article. But you're actually there watching it. You can have a conversation with the people who are driving it, figure out when they say, like, no, we have all the votes. Like, we only need 5 votes, we've got 7. This is all getting approved. That's the kind of thing where you're looking for a reason to run. And if you don't get a reason to run, you've got enough reasons to want to run towards it. That's a great practice. So Panama Canal is opened in like 1914. 1914, you can now get through Central America and not have to go all the way around the Horn, all right? So shipping lanes benefited greatly from the Panama Canal creation. 100 years later, the kind of ships that can fit through the Panama Canal, none of the big ones could, okay? It hadn't been dug wider or deeper. So the big ships, the ones that carry 5, 6, 7 times the cargo, were landing in California, getting off in LA and Long Beach, getting on trains and trucks, and then making their way across the country. Panama Canal expanded. 102 years later, it opened up. 2016, Panama Canal got wider and deeper and now can fit those new post-Panamax ships, they're called. The shipping lanes across the globe are totally being redrawn, and anybody who wants to get goods to the population centers in the Midwest and the East Coast, it's probably cheaper to keep them on the boat and drop them off in Houston, New Orleans, Miami, Savannah, Charleston, Norfolk. So Panama Canal is making all these port cities get a big opportunity to grow. Grow equals growing jobs. But if you read about what the different ports are doing, some of them have a good balance sheet. They can issue bonds, raise capital, dig the port. Others can't, right? Some had the political will, others didn't. So Jacksonville is on the list of one of the cities that just really kicked butt at preparing for the Panama Canal. And they're getting an outsized benefit as a result. Charleston's another one. Norfolk's another one. Tampa's another one. You can show up and start reading. Like one of the things that I love to do, here's a great example. All right, I'm looking at Google right here, and I search city of Chattanooga, which is one of my favorite little towns that's coming on strong. Approves fiscal year budget, business improvement district. You dig into these kind of things. I set up alerts on a whole bunch of different towns that I want to keep my eye on, and I do the Google alert, the name of the town, the city of blank, or the county of blank, or the town of blank approves. I did city of Belmont approves, train station showed up in my inbox. I knew the day that it happened, and I made the commitment shortly thereafter to start buying those properties. I wanted to wait until after it was approved, but before it was built. If you were you're thinking about making some investments there, because you're thinking the right things, by the way. The question of is if a market is cheap, but now it's catching on, like what's the deal, right? Is there an opportunity there? Starbucks is an interesting indicator because they pretty much go anywhere and everywhere, but they don't pull out. And so, they've got some people that have a lot of research data that says that not only is this a place where there's enough population and there's enough demand for $6 coffee, but the hipsters may be coming. There's a youth, and hipsters are good, man. Hipsters, they go into neighborhoods that need to be turned around. They like the edginess of it all. Are you by any chance a hipster, John Michael?
Maybe a little.
Do you have a man bun, John Michael?
No, I do not.
I want to talk about job diversity because people make assumptions that certain industries dominate certain cities. And anyway, it just gives you the ability to maybe bust a myth. How many times have you seen articles in the Houston Chronicle talking about, gas prices are down, and so Houston's over? And Houston's never been done for. Houston is totally diversified. The oil industry is a big industry. It's not the only thing going on down there. And I'm going to go to the investor marketplace, research center. Here's the job diversity. Trade, transport, utilities, number 1. Professional and business, number 2. Education and health, number 3. Here's natural resources and mining. So drilling for oil is 3.9% of the economy. Obviously, trade and utilities is also fed by the energy industry. Obviously, business and professional is also. But you would see people say, well, the price of oil, and so the refinery business, it's number 9 or something on the list. Mythbuster. Okay, this concept of late bloomers. Markets develop at different paces. So like I look around, I grew up in New York. New York used to be Manhattan and then the boroughs around it. So Staten Island, Brooklyn, Queens, and the Bronx, right? And then it went out to the suburbs, the counties that were on the ring around New York City. That was where the cheaper deals were, okay? Each of those suburbs developed differently. Some of them were luxury, some of them were working class, some of them were poor, some of them were middle class. It just developed differently. It had to do with transit, it had to do with developers and politicians working together. So Rockland County, where I grew up, the average sale price was $250,000, and Westchester County, right next door, was $400,000. Then what happened is a lot of the companies that were based in New York, who had very high cost of rent, moved out to the suburbs, which created a two-step. So the commuters that lived here moved out here. And all of a sudden, that second ring of counties outside of New York began to develop, and different ones developed at different paces. And just any city you're in, think about that, right? It's likely that the fundamentals that drove this suburb, and that suburb are going to eventually drive this suburb. So you're not taking a big risk by predicting and making a bet on that suburb because it's just the late bloomer. That principle of markets that evolve and mature at different paces also holds true for entire markets.